Hello everyone, it's Luis Avalos, your 24/7 Realtor from Big Block Realty and www.my247realtor.com. I'm here today with Dave Ramirez from Pure Mortgage, the Senior Loan Advisor, your #1 source for loans. Say hi to everybody, Dave.
Luis, good morning. It's good to see you. Hello everybody out there. I'm really excited to be sitting down and chatting with you today.
Today, we're here to kind of pick your brain for all the first-time home buyers out there. I know there's a lot of questions that you have. I was able to bring it down to 8 questions today that most people have and that they should kind of bring to you. Okay. So we'll just get down to it. Go with question number 1.
Okay.
What are the documents a first-time buyer should bring to a meeting with a loan officer?
Outstanding question, Luis, and here's my thoughts. So, of course, when you call me and tell me, I've got a buyer I'd love for you to talk to, I'm going to send you a checklist. It's going to be a detailed checklist itemizing everything that the borrower should bring to that initial consultation. That being said, to make it easy for everybody, I like to call it the rule of 2s. 2 years most recent year's tax returns, 2 years most recent W-2s, 2 most recent pay stubs, and the 2 months most recent bank statements for all accounts being used for down payment and closing costs. If a borrower can bring those in, we're going to have a great initial conversation. We're going to be able to figure out exactly what their qualifying income is, so we can figure out how much house can they afford. We're going to be able to look at those assets, figure out what kind of an account they're coming from, and how we're going to use them for a down payment and closing costs. So we can start with those. For all the rule of 2s, we're going to have a great first conversation.
Absolutely. Great advice. Rule of 2s, guys, is 2, 2, 2, 2. 2 years, 2 years, 2 most recent, 2 most recent. Once we get those, it streamlines it and we're ready to go.
You got it.
So the next question coming up is, what are the credit score tiers that you guys consider? So bad, good, great, excellent in terms of numbers.
Absolutely, absolutely. So great question. Let's start at the bottom. Below 600, that's going to be sort of that defining line. Let's not use the term bad, right? Let's call it less than perfect. For that less than perfect situation under 600, there are fewer loan programs out there. We're going to have limited options. Borrowers are not going to get the best interest rate and terms out there.
Okay.
Usually there's something fairly significant in the credit report that has occurred that is causing that score to be below 600. So it doesn't mean that that's the end of the story for that borrower. We're going to circle back to that in a second. Still some options. 600 to about 650, that's going to be what we might call fair territory. We can certainly still work with that. There's loan programs. FHA is certainly an option out there in that category. And typically what we're going to find is that there's maybe a blemish or two within the credit report that cause them to have that score about there. 650 to 700, we're starting to get in what we call the good territory. There's typically really nothing too bad in the credit report. It could necessarily simply be a lower score due to the fact that they don't have a wide variety of credit trade lines, what we call trade lines or accounts, as the layman would know them as, in the credit report. So there's just not a lot to analyze, and so the score is not quite ideal. So 700 to 750, we're in the very good territory at this point. We're starting to get to somebody who has a long established credit, multiple different lines, maybe auto loans, student loan, credit card accounts, revolving or Amex type accounts, etc. And so that's going to get us up to our next tier of about 750 and above. 750 and above, that's putting us in our platinum territory. That's somebody who has pretty sterling credit. There's no derogatory items in there. And that's somebody who again, has a long established credit history, and they're going to see the absolute best interest rate and terms available. That's a platinum borrower right there.
Outstanding. And you know what? It's one of those things where you look at the 600 and you go above, and some people don't, they see, oh, my credit score is bad, my credit score ain't so great. What can we do about those type of lenders?
Great question, Luis. So with those folks, right now we have great options. We work with Big Block Realty, Pure Mortgage, and we work with Credit Repair Heroes. These guys are absolute pros at being able to do a very comprehensive analysis of a borrower's credit report and identify if there's anything we can do to fix that score and get it to where we need to be to either A, do a mortgage whatsoever, or B, elevate that score enough so that we can take somebody who maybe had a 600 score, get them closer to 700, so now they're getting way better rate and terms. So they're able to, again, do that analysis for you. They've been doing this for years. They're absolute pros. And that's always my first resource. When I see a report that's not perfect and I get the feeling there's maybe something that can be done, we go to Credit Repair Heroes to see what they can do.
The next question. what is the market's current interest rate? So today is June 30th, 2016, so that way we kind of know exactly what date it is time-wise.
Yep.
What is the current market interest rate?
Absolutely, great question. Today's interest rates are at 3-year lows, tickling all-time lows right now. It's absolutely incredible. FHA VA financing, 3.25% on 30-year money. That's absolutely unheard of. On conventional financing, we're looking at 3.75%. Both those rates well below 4. Absolutely superlative rates right now. The recent economic news coming out of Europe with the UK exiting the European Union, Brexit, has been good news for interest rates in the short term. And so right now could not be a better time to be borrowing to buy the home of your dreams.
All right, so we'll move on to the next question. So this one's more of a follow-up to our previous question. Is so where do you see the market going in interest rates within kind of short term, 1 to 3 months, and then long term, 1 to 3 years?
Gotcha. Great question. Short term, 1 to 3 months, I would say we're going to see rates staying pretty close to where they're at. They may move around within 1/8 to 1/4%. I don't see them getting much lower. So there's really no reason for anybody to wait for interest rates to get lower if that's their buying decision. I don't think it makes any sense. They've got a lot of room to go up, but not much room to go down. So that being said, I think they hover pretty close to where they're at, 1 to 3 months. On the longer term, looking at over the next couple of years, let's be honest, they're at the bottom right now. There's not any room to go lower. I think the smart money would be betting on rates inching up over the next couple of years here. I don't think we're going to see any return to 6 or 7 or 8% rates anytime soon. But let's be honest, if it were up to me, I'd much rather lock down 3.25, 3.75 today than try to hedge the market and for whatever reason, and only to find out that when you're finally ready to buy, for whatever reason you've been waiting, rates are 5.25%. That monthly mortgage payment has gone up substantially, and so that's my thoughts of where they're going to go. Maybe gradual, up, barring anything unforeseen in the financial markets.
Yeah, absolutely. You know what? Once we hit such a low type of interest rates, it's like you said. There's really not a lot of wiggle room to keep on going down. So it's more likely not. But again, nobody has a crystal ball. Nobody can really read the market and tell you this is exactly what's going to happen this next month, this next year. But we can do analysis, we can do assumptions, and I think you guys are actually one of the best companies to work with because you guys work on that all the time. You guys are always looking at those numbers.
We do. We watch the charts. We follow economic news. We make sure we're as up to date as possible. We've got charts and tickers hitting our laptops, our screens all day, so we want to make sure we're executing as well as we possibly can for the client.
Absolutely, and this is one of the things that I always advise my client is that the only time to buy is when you're ready to buy. Don't try to predict the market. Don't try to say, hey, this year, next year. Because last year everybody was saying, oh, the market's going to crash next year.
Right.
And what happened? Now we're up 10% from what we were the previous year.
Agreed.
People just are baffled of the fact that it's so high, and we're only inching and inching higher, especially as the summer rages on.
Absolutely. San Diego is not going to get any less desirable of a place to be. I don't see that happening anytime soon, and so you're absolutely right.
Yeah. Cool. All right, so let's move on to the next question. So what is the loan product? Because everybody has their own products.
Sure.
Some people have very, very generalistic products that everybody works with as loan advisors.
Yep.
What is your product that you are the most excited about today?
Great question, Luis. Right now, my favorite product, it's a Fannie Mae product. It's called the Home Ready Program. Absolutely amazing. Number one, extremely low down payment requirement, 3%.
3%.
3%. Who doesn't have 3% ready to go?
Right.
Super minimal skin in the game in order to get into your home. Number two, very flexible credit underwriting guidelines, and I'll give you some examples. The entire 3% down payment can come in the form of a gift from any family member. That's amazing.
Yeah.
Number two, the down payment can come in the form of cash. So let's say you're working with a client where your buyer is in a cash-based service industry. Now in the past, maybe they didn't necessarily deposit all those funds in the bank for whatever reason, and cash was in the past not an allowable source of down payment and closing costs. Now that's changed, and so now we can use those funds. The shoebox full of cash under the mattress, right under the bed, the mattress money. Furthermore, let's say that borrower is close to qualifying based on their income, but not quite there. If that borrower had a roommate, for example, or boarder, as we call it on our side of the lending world, we can use that roommate income to help them qualify. So I could go on and on about all the details, but these are just a handful of the amazing flexibility underwriting guidelines, flexible underwriting guidelines that this program offers. And so I've been trying to tell people about it all the time. I know we've discussed it a few times. I'm excited. I just think it gives that many more people an opportunity to get into a home without a heavy down payment and while enjoying today's flexible guidelines.
Yeah, that's amazing. So in that's probably more the buyers that are just first-time home buyers coming in, don't have a whole lot of cash to play with.
Mm-hmm.
What about those other buyers that are, looking at the $700, $800, even up to $1 million home buyer prices? What loan programs do you like about them?
Glad you asked, Luis. Very excited right now about a 90% jumbo program. This is amazing. Loan amounts up to $1 million. We're basically able to get in with a very minimal 10% down payment. No mortgage insurance, which is incredible. I absolutely love this program. It hits a lot of sweet spots, and I'll give you an example. Let's say you're talking about a doctor or physician recently out of med school. He's got a great income, maybe an attorney recently out of law school, something along those lines. They got great income, but they haven't really amassed that 20 or 30% down payment that maybe they might have needed a year and a half, 2, 3 years ago, right? 10% down, on the other hand, a much more attainable number for somebody to save up in a relatively short amount of time at that level. Now they're in, they've got the property, and 10% down, no mortgage insurance. I mean, what can we say? It's an amazing program.
Yeah, and that's amazing, because typically you're looking at, even at 15% down, you're still paying that mortgage insurance. So now that mortgage insurance is deleted with just 10% down payment.
You got it.
Wow, I'm lost for words.
I'm excited.
So let's move on to the last and final question, Dave.
Yeah.
We have, is there any advice that you as a loan advisor would give to a first-time buyer? Your number one advice?
Absolutely. So the number one thing that I would tell any buyer is get pre-qualified early on in the process. Once you find Luis, once you've got the conversation started, now's the time to sit down with me, your loan officer, to analyze your income, to look at your assets, to look at your credit, and make sure that we are going to be able to secure you the financing that you need so that when you guys find that amazing property, that you guys are ready to pull the trigger on it and you know exactly how much home you can afford. I think that makes everybody's experience so much smoother, and ultimately it results in you being able to fine-tune your property hunt so that you're able to find exactly what's going to be affordable for the buyer, what's going to meet their goals and objectives. And so at the end, as the contrary to that is when they don't do that, they come to me late in the process, they've already found a home, they've already decided what color to paint the nursery, et cetera, and then I come in and dash their hopes and dreams when we find out that they can't afford the house. So start it early, get pre-qualified quickly and early, and Luis will take you on the hunt, and you'll find the home that you're looking for.
Yeah, absolutely. It's one of the first things I always tell my clients when we first meet. Okay, have you talked to a loan officer? Do you know where your budget is at? And most of the time, everybody just wants to look at a house first. And unfortunately, I would love to be able to take you to all the $1 million houses. We can look at the beach, get really excited, and then all of a sudden, this is my beautiful, perfect home. You fall in love with it, and then I bring you to Dave, and then Dave becomes the bad guy. We don't want to do that. Do the best service for you, make you happy, make you find the right home, look at the right properties that are within your budget, and therefore, we move forward.
Well said. I agree.
So it's been a pleasure, Dave. Always visit our website, www.my247realtor.com. That is www.my247realtor.com. We'll be here. We'll always be bringing some information for you. Always nice to have Dave here. Pure Mortgage, as always, we work for them and they work for us. It's been a pleasure, Dave.
Pleasure, Luis. Thank you.
And always be safe out there.